and welcome to our March Investor Webinar. For those of you who don't know me, I'm Donald Leggett and I'm Head of Investor Relations at London South East, and I'm your host for this evening. We are joined tonight by four truly excellent companies, three of whom will already have a considerable following on London South East, and will introduce you to a £500 million plus market cap Canadian gold and copper miner with great growth potential. Sadly, Sean Day from Greatland Gold, he can't make it tonight, he can't join us as planned, and instead we have a provisional date of the 21st of March for a solo live webinar with Sean, followed by lunch reception for shareholders, where you can actually get to meet the Greatland Gold CEO in person. Just keep a lookout for more details and we'll let you know all about that. Tonight though, we are absolutely thrilled to welcome Brad George, the CEO at Orosur Mining, who's hoping to start discussions about the next phase of a potential Tier 1 gold mine in Colombia soon. We're equally delighted to welcome Yamin Khan, and he is the new CEO at Open Orphan, and he's making his debut alongside the Open Orphan Executive Chairman, Cathal Friel. Third up is Petro Matad, and they're hoping to develop a 6,000 barrel of oil per day oil field in Mongolia. And 2022 might turn out to be a transformational year for Mike Buck and the team. And we welcome Kleber Cardoso, Chief Financial Officer at Minerals, who run profitable gold and copper mines in Honduras, Mexico, and Brazil. Ora are hoping to increase annual production by up to 50% by 2024. So they're an archetypal growth stock. Let me give you some brief housekeeping points. Each speaker has 30 minutes to make their investment case, with around 18 minutes spent talking to slides, and then we take questions from the audience. Time to hear from our four great companies. Our first company tonight is AIM-listed South American metals explorer and developer, Orosur Mining. We're preparing to sit down and negotiate with two of the world's largest gold miners, Agnico and Newmont, for phase 2 of the Anza gold mine, a potential Tier 1 asset in Colombia. Orosur have been diversifying into tin exploration in Brazil and gold in Argentina. And tonight, live from Australia at around 2 a.m. his time, I think, Brad is going to introduce us to the new Orosur. Greetings, Brad.
Yeah, good morning, Noel. I've been out clubbing, so I've just got back, so I should be in fine form.
Enough said of that, better, Brad. Okay. Do you want to tell us about the new Orosur?
Right, so I gave a talk, or just an audio discussion a few weeks ago. So this is more of an in detail discussion of where we are. So I'll keep this brief. We'll zip through the usual corporate gumph. The share price is beginning to recover, but obviously we live in interesting times. And what we're seeing in Ukraine clearly is very much a risk-off event, so everyone's being absolutely hammered, unless, of course, you're a producer. I see metal prices today going absolutely mental, so they're pretty out producing, but that's a nice, well, it's an interesting demonstration of just how fragile many of the metal supply chains are. So whether that indicates we're coming into super cycle, well, we can only hope. So where we are, I mean, this is a good chance, I guess, which is over probably 18 months since myself and the other new directors joined the company. And the company is now very different to what it was when we first joined, in obviously a good way. So the company was a gold miner for 20 years in Uruguay, and all mines come to an end. So that was wound down in a rather painful way in 2017. And so when I joined the company in 2020, it was really quite a difficult time. The share price was, I think, 1.8p from memory. We had little or no cash. The Uruguay wind up of the operation was still going, was somewhat uncertain, and was a bit existential. There was certainly a risk there. And Anzá really hadn't restarted and no one knew what that was. So we had an entire new board from May through to June. We then cemented the discussions with Agnico and Newmont on Anzá, with Agnico joining Newmont on that joint venture, and that kicking off in September 2020. So that was obviously very encouraging. clearly we're in the middle of a pandemic, so Anzá was complicated, and Colombia was in the heart of all that. So we remain the operators, even though Agnico and Newmont were funding it. So we ramped up from 5 people to 100 people quite quickly. We managed really excellent work with the team on the ground to drill 10,000 meters during the pandemic with the ×5 drill rigs. We got some very good intersections, as much as we could, given the limitations of movement. We had mapping and sampling going on, finding new prospects. And that's continued, and they're about to be commencement of drilling again on those new projects soon. Uruguay was slowed down somewhat with the remediation due to wet winter, but that's improved now, and we're near completion. We raised 6 million, which was very much necessary and well supported to get the balance sheet going. We announced last year that Agnico and Newmont had, as was their right, assumed control of the Anzá project, so we handed over the keys. That's a very good thing long term. It did mean a few months of quiet news flow as we did that thing moved across, but in the long term it's a good thing. And we've since then moved on as a company to new ventures with the Araquimas tin venture in Brazil. We announced recently the El Pantano venture in Argentina, and we have a few more that we're kicking tires on now, so we'll see where they move. So we've managed in the last 18 months to move from an old producer back to an explorer. So a complicated time, but we are where we are now. The reasons behind this, I guess, are not rocket science, as much as we might suggest. We're very clever. We're not. The first key was just to survive, and that by no means was a given at the time. We had no money and there were issues, so that was ticked off. Anzá was moved back into operation with Agnico and Newmont, so that was positive. Uruguay, watch this space. We're very close now. We're summertime, that the dams are drying out, so we're pretty close to that being completed. We've got 2 new ventures, so that's ticked off, with more on the way. I think the last 2 are probably work for the next few months. We were a producer. We lost our way somewhat as the mine came to an end, so we've been going through a process of rebuilding the company and rebuilding shareholder support and shareholder trust. And I think we're probably pretty close there, but we've had difficulty with being able to communicate that to the market with our inability to travel. So now that the gates are unlocked, we can get back and we can begin to spread our story. The super cycle, well, we'll wait and see, but I think one of the things we're doing is just to acquire assets in key locations so that we can ready ourselves should we enter a period of high metal price over the next couple of years. And so, of course, is the key project. Some nice pictures. So where we are now, we began drilling there with Agnico and Newmont in November 2020, and we've now drilled about 11,000 meters, or since that recommencement, with about 35,000 in total over various owners of the project since it began. APTA is the central part of that project, where most of the drilling has been undertaken, and that's been largely now proven as an interesting little, I won't use the word resource in inverted commas, but an interesting little project. There's definitely a gold system there. And some of the intersections, one we announced obviously was probably the most exciting, was middle of last year, about 60 meters at 10 grams. So, highly encouraging. Something's going on there. There's a lot more work to be done. That probably begs the question of why did we stop? At one point we had 5 drill rigs, now we have 1. And that brings us back to the question that the big companies think a bit differently to small companies. Newmont is the world's largest gold miner. Agnico, post its merger with Kirkland Lake, is now number 3, I think. So these big guys need big things. We can pick a number, but they probably need something of the order of 5 million ounces to even begin to look at this project as being something that they would develop. So they're not interested in APTA other than as proof of concept. They're interested in what is the potential of the entire belt. And we have 20 kilometers of strike that is effectively untouched. So they gain little value from drilling APTA to a resource, as we would do. They want to see the wider potential before they then come back and drill APTA to a resource. So their view is to look at the whole project area, assess whether it has the potential to be of their scale, and if so, then come back and begin the work. And we would like to think that their decision to assume operatorship was testament to their belief that this is potentially of their scale. So where we stand, we have one drill rig going, as I said. The announcement this morning indicated that we're looking at new prospects along strike, north and south, and we'll be looking to commence drilling on those as soon as the permits are given. That's water usage permits and land access. Those are pretty close, so we would like to think that they'll be drilling there in the very near term. To give just some flavour to the potential, we're concentrating on the Aragon Fault, and I'm sorry I can't use my cursor here. The Aragon Fault runs from the southwest to the northeast through the entire project area over a strike of about 20 kilometres. Almost entirely all the drilling's been done on a central portion of about 600 metres at Aptar. And that's because that's where the original discovery was. There was an old gypsum mine found there many years ago, and they found gold in the gypsum. So that's how that was found. And we've had no drilling at all north and south. And the mapping that we've done over the last couple of months, we're beginning to find very high grade samples in veins and outcrop. We've got samples of over 10 grams in various places to the south and a couple of grams to the north. So these areas are telling us that the system is not just at Aptar, that we're seeing repetitions geologically all the way along strike. And we hope to get in to drill those, or Agnico hope to get in to drill those as quickly as they can. And they're certainly ramping up activity and pushing hard to get the permits done. So along strike, we've got essentially the entire belt is as yet untouched. So that's quite exciting. The other question is depth. And we announced this morning 2 holes that Agnico drilled really just to test geological concepts of anticlines. And these were deep holes. And they found high-grade hits about 100 metres below where we'd had previous drilling. This was unexpected and quite exciting to get some very nice intersections that far down. It opens up the whole area underneath. It requires a lot more work. It's very good news, but it's slightly annoying because it's too far or too big of a gap to really allow us to draw interpolations, but it does show that this thing continues at depth. So we're open at depth, and along strike we've got 20 kilometres to go. So it's shaping up at this stage to have the potential to be a really major mineralised region. And whether that then translates into a mineralised mining camp is the big question, and something we're going to find over the next couple of years. So where we stand, they've assumed control, but we own the project still 100%. We're in the final year, the 4th year of the first phase. Now, the way it works is that we've got, at the moment, an option agreement that gives Agnico and Newmont the option to form a formal joint venture at the end of this year, in beginning of September. So that's going to be a long, protracted process. Phase 2 is a 4-year process where they must spend $20 million. That takes them to 65%. And then phase 3, they earn another 10% over another 4 years, but uncapped in terms of money because it's an uncertain sort of thing. So we are fairly comfortable that we will begin the process of negotiating that joint venture reasonably soon, because it might take a few months. And that will give us some comfort that when they pull the trigger that we move forward into phase 2. Phase 2 trigger also requires a nice payment to us of $2 million. That'll be nicely welcome. Operationally, they are continuing on as before. They have 1 drill rig running. They have negotiated access to more drill rigs, and they'll be brought on site as soon as the permits are in place. At last count, there were 130 staff on site, 20 geologists. They're mapping and sampling, finding more targets. Geophysical surveys, IP surveys are about to restart. They did start last year, but we had issues running into the coffee harvest season, and all our staff ran away. So that's all restarting again now post coffee. So that'll find us new targets. And really, it's the question now is going to be one of drilling. When do they start, and how serious do they go? So I would like to think it's obviously an uncertain timing. It's out of our control, but in the next weeks or months, we hope to get back into that drilling really quite in a major way. And the other big question is that only half of our project area is available to work. The other half is under application. we have begun the process sorry, of converting those applications to tenements. That again was a process that was delayed in Colombia due to the COVID pandemic and the inability to undertake the community consultations, which is a necessary part of the process. So that's begun now. COVID's gone. Those meetings can be held, and we would like to think that early in the second half of the year, those will be granted and we can move forward into that. But there's enough to keep us going for quite some time. So news flow hopefully will ramp up with the drilling, and we'll let you know when all that's beginning. The beauty of having the project handed over to Agnico, of course, is that is twofold. One is that we now have a major project that has resource potential and very large scale potential being managed by someone else off our balance sheet. So that gives us a free option, or a free hit, if you like, on a major project. And it frees up our people, it frees up our balance sheet, frees up our expertise and managerial attention span to look at new projects, and particularly to look at projects maybe other junior companies couldn't do. We can maybe look at earlier stage projects. Now, why we do this? Well, we do it because we can. That's one thing. But it also gives us diversification. We look at different projects, different project stages, different commodities, different geographies. It exposes the shareholders at little marginal cost to additional targets and ventures. It gives us a little bit more control over news flow. One of the downsides, I guess, of having Agnico assume control is that they control the news flow. So we get the data, but on slightly less regular schedules. It also, I think, importantly, gives us options. I mean, we're very excited by Anzá, but you can never guarantee these things. And you don't want to be looked at and priced as a one-trick pony with Anzá is a good project, but the outcomes are either A or the B. And we'd rather have A, B, C, D, and E in terms of what the outcomes might be, rather than a binary yes or no position. So having a number of projects across different countries at different stages gives us different ways of generating value and generating news flow. So it's really part of positioning us to being a reasonably well-balanced exploration company. The trick, of course, is doing it. I mean, it's easy to say, but you've got to be quite careful how you're doing. Our first point is that we want to protect the balance sheet. We raised $6 million late 2020. We would like not to have to raise any more money in the near term. We'll be getting on to 2 years since that raising into this year. We would like to work within the capacity that we've got at the moment. There are no promises, but we're looking at projects that we can fund with existing cash. I noted we're looking at projects at a bit earlier stage. Now we can debate this, probably not tonight, but in my view, that's the sweet spot that juniors haven't looked at for the last 20 years because they couldn't fund it. Earlier stage projects are cheaper to find or cheaper to buy. In our case, they're free. And they're much cheaper to add value. If you look at a project which is early stage and you take one rock sample, then suddenly you've added a huge amount of value. And they're much cheaper to explore. So that is our strategy, to acquire large areas of land in key areas. We want large land holdings. Exploration success needs lots of land, and we look at hundreds, if possible, even thousands of square kilometres to give us possibilities in key areas. We negotiate entry costs that are low and hopefully zero upfront cash. In both cases and going forward, we want projects that give us the first 12 months of very low cash burn, so we can get our feet on the ground, learn the project, and we're not being rushed to spend money quickly in a bad way. We want the first year to be nice and relaxed. We can just take our time and feel our way. Now, obviously, with Russia invading Ukraine, we didn't foresee that, but that kind of issue, that kind of black swan event, is testament to why we do this, so that things can happen, so that we can maybe wind back our cash burn and wait for that to blow over. But we don't want to be forced to do things that we don't want to do. 1 minute to go, Brad. So key commodities, key regions, near operating mines, and each project really has to be good on its own merits. So jumping forward to Brazil, 3,000 square kilometres. It's one of the world's major tin producing districts. The tin price, of course, is going crazy, but let's not look at that. All of the usual things: low entry cost, very low exploration costs over 4 years. And it's a vertically integrated region. There are 5 tin smelters in the Atacama town. So anything we can find, we have a customer for just down the road. So our hurdle rate of what we need to find is much smaller. So that again gives us options. This will take some time. Brazil is a little bit bureaucratic, so there's going to be a few months of getting our company set up, but that's looking at April, May, June. There are options there we're looking at. One is the tin mining, 2, the artisanals need funding, the smelters need feed. And there's also another aspect there, that there are other metals that they don't mine, niobium, columbite, rare earths, titanium, various things. So there is an interesting play there that we'll develop and talk to the market about in a few months' time. The new one's Argentina, El Pantano, again a large area. The Deseado Massif area is a major gold producer. We have Anglo Gold down the road at Cerro Vanguardia with 4 or 5 million ounces. It's a large land holding. We're seeing, again, very low entry costs, 0 entry costs. And interestingly, we have the right to move to 100% ownership, which is very unusual for a joint venture. So that again gives us options. And it's a very cheap place to explore. It's flat, it's empty, it's desert. We can drive around. Colombia is expensive, this is cheap. And Argentina has some preferential exchange rates available to us. We can basically come in and buy pesos at half price. So it's a very cheap place to explore, which for a junior is a good thing. The region is quite remote, but it's largely unexplored. It's a new project that a local group of Argentinian geologists assembled from other projects. So it's the first time this project has been put together as a contiguous block. It's remote, seen almost no work, certainly no drilling. There are some high-grade rock samples taken in the project and around the project, but it's showing all the signs of the right rocks, the right age, the right structures, the right alteration, and the right sampling has gone on that tells us that the plumbing exists for something. But it's a very cheap place for us to go and explore, and we have the crews going on Monday, in fact, to begin work there. So that to us is exciting. It's very cheap, and that could give us some very fast news flow quite quickly. So that's very exciting. And we have other projects in the region we're looking at, so we'll watch this space. But that's a very, very exciting new entry to what is a major existing gold province. So I'm running out of time a little bit here, but so that's where we are and where we're going, and where we'd like to see the company over the next 18 months is obviously subject to wars and things, but Anzá is progressing, and we want to see activity ramp up there and news flow in the next couple of weeks and months. So that runs off our balance sheet. Uruguay is very close to being finally wound up, so will be nice to get that done and remove ourselves from the history. We'll have 2 other projects at least operating in parallel, possibly 3. We'll see how we go. But the first 12 months, our costs are very low, so we're operating within our balance sheet constraints. We'll look at new projects. We always will. It's always something you do. New things arise all the time, so we may see new things. And that plan is always to look at new projects, assemble acreage in key areas. And the last point is slightly sort of fatuous, but we don't want to be a one-trick pony. We want everything we do, every step of the way, there is an A and a B and a C. And knowing where the door is always the key issue with any mining company. So we like to think we do.
Can we just jump straight in and ask you, where are you with the latest phase 2 discussions with Agnico? Have they started? Have they? Tell me what the email trail is. What's happening on the ground?
When do discussions actually start? I mean, we've had a nice lunch and a beer, so that is a discussion. As I noted, the movement from phase 1 to phase 2 actually involves a formal joint venture being developed, and there'll be lawyers involved. So that will take a few months. So what we'd like to think is that they will come close to spending their $4 million probably ahead of time. And knowing that they need to spend a few months on the JV, those discussions will commence reasonably soon. So, but it could be a 3 or 4 month process going through all that and negotiating terms. Most terms are already set, but there is always scope for some tweaking here and there. So I can't tell you when there will be a formal announcement. There is going to be the negotiation, and then there's going to be the actual trigger point of them saying, yes, we enact the option and move to a JV. So I would like to think in advance of September, but we'll let you know.
And at what point do you get the 2 million?
The 2 million comes in, we form the joint venture, we form a new company in Colombia, the assets are transferred across, and as compensation for that event, we get the 2 million. So it's the JV agreement would specify 90 days after that event. So obviously if we trigger it beforehand, we get it beforehand, but certainly we'd hope within this year.
Now you own 100% of the project, and at that point it goes to 49%. Is that correct?
Yes. So Agnico and Newmont would earn 51%, and we'd own 49% of that new company, and then they would carry forward over the next 4 years. And at the end of that 4-year period, if they meet all the conditions, they would own 65%. If they don't meet those conditions and they decide to withdraw, for example, then the shareholding flips back in the reverse direction. We go back to 51. So it's a very complicated JV, but asking in 4 years' time. And
the $20 million, does that come in tranches of 5 million? How does that get paid, and when does that get paid?
It's 4 million a year for 4 years, plus an extra 4 million at their discretion. But there's no, they can accelerate as much as they want. They can do it all in 2 years if they wish. Okay. So the 4 years is the maximum, although they can extend by paying a fee, but they can go faster at their discretion. So it's I think they're in a hurry. So I think it'll be faster.
You were talking in your slides about a definitive feasibility study, a DFS, and it seemed to indicate that it might potentially take 8 years. But on the other hand, that's also in the gift of Agnico, I presume. How long might it take to get to a DFS?
It could well do. If we look at Buritica up the road, which is sort of the poster child of that area, they drill something of the order of 300,000 metres to do their reserve in the DFS. So a DFS requires, by definition, a reserve. And when you're looking at these sort of deep underground things, drilling is a very large component of that. So that's why that phase 3, while it is fixed in time, 4 years, it's not fixed in money. They have to spend whatever they've got to spend to do the DFS, which I'm sure they hate. But that could easily take 4 years and could easily cost another, pick a number, $50 million. Okay. So it is a very large job to go to a DFS. We shouldn't underestimate just how big and complex that issue is, which is why it's nice to have people with deep pockets involved.
Very wise words, Brad. Ariquemes in Brazil, El Pantano in Argentina. How excited are you about the prospectivity of both those projects?
Look, I'm not a very excitable person, so I'll try and restrain myself. Look, I am excited because it's very rare that you see projects of this physical size and prospectivity available at no cost. I mean, in a normal time, and I would think that now that COVID's gone, and now, well, once we've got the issues in Ukraine out of the way, these projects wouldn't be available again. That there was a window of opportunity where nobody could travel, nobody was doing deals. These things became available. 3,000 square kilometres in the middle of one of the world's biggest tin districts. You just can't imagine that ever being available again. So you think I'm very excited.
This is good business, Brad?
Well, I think it was a good window that we jumped into, and we were just lucky that we could do that at a moment where other companies possibly couldn't. I'm not saying we're clever. We just had that benefit of being in the region and having this major project that gave us the ability to do things. So they're very exciting.
I've been reading the chat boards. Your shareholders are not entirely impressed with this because they think, well, nothing's going to happen with this. It's not going to be worth anything for another couple of years. So let's just park it for now. It's a bit more than that, though, isn't it, from what you've just told me?
Well, it is. I mean, you have to understand the exploration process is a long process. If you don't start it, you're never going to end it. So,
you've got to start it well. A good deal is only a good deal because you managed to start it well at the beginning.
Exactly. I mean, the actual negotiation process for new ventures is quite a complicated one. And what investors see is the end product of 6 months of haggling and calling each other rude names. So it's quite a complicated process. But obviously the work starts now. But I'm very excited, and they both have all the right chemistry for what I think is a good 12 months.
Fantastic. Final question, really quick one. I'm sorry to annoy you with this because I've asked you this before. The chat boards are always banging on about when will the directors buy some more shares in OMI?
Yeah, that old chestnut. Look, I don't speak
what
for
they
the
all
other
want to know,
directors. Yeah, the other directors will do what they want. I certainly will soon. What I always say, however, is that we as a company have a very rigid view on governance and regulations. Being Canadian, it's really hard work for us to be in a position where we don't know stuff. You know, we have quarterlies, we have annual reports, and certainly up until the end of last year, I was getting daily drill reports. And I just know things that you don't know, and that makes it very difficult for us to ever get to a point where we can actually put hand on heart and say we're buying on fully disclosed information. So
you've just
that's
got to
improving.
do it at some point, haven't you, Brad?
You do, we do, and we will. I certainly will, and the other directors will do. But that's a personal decision. But yes, I will. Am I going to buy millions? No, I'm not rich, sadly. So I'll do what I can at a demonstration of support, but don't expect me to be wading in and mopping up all the excess.
Brad, you're a complete star. Thank you so much for getting up at what I believe is 2 in the morning in Australia to speak to us this evening. Thank you so much. And thank you for answering so many questions concisely. Thank you very much indeed.
Always a pleasure.
Time for Open Orphan. As you probably know, Open Orphan is an AIM-listed, rapidly growing contract research company, a CRO, and it's a world leader in testing vaccines and antivirals using human challenge clinical trials. The company provides services to big pharma, to biotech, to governments, to public health organizations. So it has lots of markets, and there has been significant growth of the infectious disease market, I do apologize, which is estimated to grow to in excess of 250 billion by 2025. And we're lucky to be joined tonight by Yamin Khan. He's the new CEO at Open Orphan, and Cathal Friel. You're more used to seeing Cathal. He's the executive chairman at Open Orphan, and they're joining us live.
Yeah, okay, John, I'm going to start off, do 5, 6, 7 minutes, then Mo will take us out to 15 minutes, and we'll try and give the maximum amount of time for questions, because we're fully aware there's a lot of shareholders got a lot of questions. So look, I'll preface it. First of all, look, I think people know, but we have to emphasize that we are the world leader in the testing of vaccines and antivirals using 2A human challenge clinical trials. And as you said at the start, we're addressing this enormous growing infectious disease and respiratory market. Post-pandemic, everybody's spending money on them. At the moment, Mo will confirm, 5 of the top 6 pharma companies in the world are in contract negotiations with little old Open Orphan, so that's not bad. On that note as well, look, I made it very clear, Mo's coming in the past I tried to do maybe too many tasks on my own. So Mo's coming in as chief executive. That will allow me, I know last year I promised a lot. I think you'll see in a moment what we've delivered a hell of a lot. The piece we haven't delivered on, and I think now that I've got time to do it, is the spin-outs. The fundamental business, and Mo, if we click over to it, you'll see it's never been in better shape. Look at what we've done on a tiny, tiny team, and look at our overheads. We keep the overheads very low. Yes, we probably should have bought one last spring, and the spin-outs we've done. But I think it's more importantly, look what we've done rather than what we're promising. Last year, the trading update this morning, basically we confirmed last year, EBITDA profitable, we confirmed that. This is all subject to audit, that we expected. We confirmed that it was 40 million revenues. That's not bad. That's more than double this combined business did 2 years earlier. We confirmed cash balances at 15.6 million at the end of December. And guess what? In recent weeks, there's a few million more on top of that. We also confirmed, as per last September, that we're on target for 50 million, 5 million, that's a big sum of money, in non-COVID revenue. We are, and we're working hard on COVID studies. So any COVID work will be on top of 50. So that is very impressive. We've increased our bed capacity in recent months by 50%, from 43 up to 62 beds. That's 62 quarantine-related beds we have now in East London. And that's phenomenal. And if you notice, we increased our cash balance along the way as we did all of that. So if you think about it, we had only 43 beds. A lot of people on the boards were saying, oh, we've signed all these contracts last year. Where the hell are they going to put them? Well, that's where they're going to be put. 50% increase in beds. And guess what? I think Mo confirmed that entire out of cash pockets, probably less than $500,000 we spent. We managed to be very, very creative in how we expand our capacity. a very strong pipeline of challenge studies. You saw in December where we quoted the market. We had visibility on basically this year's pipeline, which is I contracted. That's pretty cool. And really what we're doing now, and I'll talk later on, I'll answer some questions on, we're going to continue now to monetize these non-core assets. So that's kind of given everybody a highlight we've done. So I think when you reflect on that bit, that's not bad work for a tiny little team. I think a big part of tonight, I really want to introduce Mo. As you know, I'm the talkative Irish guys who probably talked too much last year, but I think I'm still impressed with what we delivered. And if you look at the let's say the unpleasant, difficult market, I have a bunch of shares in a lot of small cap companies, and as pointing out to Mo, quite a few of them are off massively more than Open Orphan's off. And the issue with them, they're all running out of cash. I wouldn't like to be raising cash in this market or anytime soon. Open Orphan has tons of cash, and we got some flack, and we do get some flack. Well, what are you doing with a big bunch of cash? And I think we want to tell people, bear with us for a short period of time. I know people say, don't say bear with us, we bear with. That bunch of cash, well over 16 million, we have good plans for it the best way, but we think handing it back at this point in time is a lazy option. So I think we will do something with that cash that will surprise and delight people. I think it'll make that very clear. And the last thing I'd say now, the really important bit is, I'll talk on the Q&A when Mo tells you what the business about where we are with the spin-outs, because I know that's what everybody's waiting for. But a key part of the spin-out is getting Mo on board. So I'm free now, and I made clear I'm staying on board as executive chairman. I'm keeping it in Mo's way. We're in the office here, and he runs the business. He's a professional. You'll see this, and I've time now to deliver what I didn't deliver in the spin-out. So, just in summary, Mo, Yasmin Mo Khan, but we know him as Mo. He's worked with us since mid-August or more, mid-October. Came on board as non-exec director, and that allowed, as Donald knows, I'm not the most conventional chairman of a public company, but sure, it takes all kinds. But Mo and I have got to know each other. I think we have a very close working relationship. He's extensive experience in the CRO, a complete professional. And maybe before to do, Mo, I'll hand over to you. And in around 15 minutes, the halfway mark, we're open to take lots of questions. Okay.
Well, thank you for the kind introduction. Yamin Mo Khan, Mo, as I'm generally known. So I've been with Open Orphan from October. I joined as a non-executive director, and I guess it was a 3-month interview period that Cathal conducted, and I'm really honored and excited to be joining as the CEO of Open Orphan as of 24th of February. I have a 25-year plus experience in both the biotech and the contract research organization, the CRO industry, majority in the CRO. I worked in a small biotech called the Lipsum company, which was later acquired by Elan Pharmaceuticals. I also worked at the small UK CRO called Innovax, which was acquired by IQVIA. And then I spent the majority of my career at a small niche Eastern European CRO called Pharma. When I joined, we were a 20-employee, 2-country CRO. And during my time there, I helped it to go to a mid-sized global CRO with over 600 FTEs, presence in over 40 countries, and lots of offices all around the world. We then sold the company in a trade sale, which I co-led to a private equity buyer. And then I went into consulting. During my time at Pharma, I managed global business development teams, performing executive roles and a relationship with the C-suite at pharma and biotech. And then at different times, I also manage global project delivery teams. So I have experience in both the business development commercial side as well as on operational delivery. So one of the key questions I keep getting asked is, why did I join Open Orphan? Well, Open Orphan is a world leader in challenge studies. I know most service providers sell themselves as a world leader in the market they serve, but we are literally the world leader in challenge trials. We have done over 60 challenge trials historically, more than any other commercial organization. We have over 9 active challenge models, again, more than anyone else. We do provide a complete full service. So we actually do think about the design of the protocol. We write the protocol. We develop all the assays. we recruit all the patients, and then we do all the analyses and finally provide the clinical study report to our customers. And as you know, we were the CRO involved in the first SARS-CoV-2 challenge trial that has been done anywhere in the world. So it does show that we are really at the cutting edge of challenge trials. And anyone who knows about anything about running clinical trials, the biggest hurdle in clinical trials is recruitment, volunteer or patient recruitment. And even in that field, Open Orphan leads the market in its flu branded campaigns. We run both online and press and radio campaigns to recruit over 1,000 screen volunteers per week. We have a database of over 200,000 volunteers in the database. So we recognize the key obstacles and hurdles in recruitment, and we have addressed those really well. One of my key goals on coming on board, when Cathal asked me to come on board, is to identify areas where we can grow. So we can grow by going into different service lines, expanding our challenge models, and then also working with our laboratory staff to increase the services we offer. So as the expansion into Plumbers Row has become effective, in fact, we are moving our offices in a couple of weeks. But as a result of that, we will have new facilities in Plumbers Row in London, which will include additional screening facilities. That means that we can now conduct non-first-in-human phase 1 clinical trials, both in bridging trials, for example, or in PK trials. With the addition of the Manchester facilities, we can also add additional laboratory testing in that area. And now we can actually access a completely new volunteer population that we can get from Manchester into our London quarantine clinics. With the expansion, we will also be able to recruit more patients and volunteers. This means that we're now able to recruit into field-based phase 2 trials, which we have not done historically. And that's something I want to target over the coming months and years. We can also act as a clinical site in multi-site clinical trials. Again, this is working with other global CROs or directly with sponsors to provide them with patients in a clinical study they are conducting. And finally, we will also be developing cross-selling opportunities between the Venn Life Sciences Group and the hVIVO Group, both under the umbrella of Open Orphan. Secondly, with the challenge model, which as I have already mentioned, is second to none, but we're not standing still. We are developing more models, modernizing the models we have. We have just released our malaria model, and we're holding workshops with some key sponsors in the coming months in malaria, and we are currently marketing that and hope to have a first malaria study later on this year. And we are always continuously exploring more models as we go by. Finally, on the laboratory facilities, with the move to Plumbers Row, we will be increasing our laboratory space. This does mean that we will be able to conduct more assays than ever before, as well as do the virus manufacturing that we are currently doing. We are also currently working with some key academic sites and helping them with lab assays, and that will continue to happen. Finally, I want to finish with some key numbers. I'm a numbers guy. I'm a scientist at heart, so I think numbers say a lot. As Cathal already mentioned, we are planning to grow revenue by 25% year on year. We have a very healthy cash balance. We are a leader in human challenge trials, and I mentioned these numbers are very 60+ challenge studies to date, 9 models, and we believe we have invested over 50 million in our time during our time in developing these challenge models. On the operational excellence side, we conduct over 84,000 volunteer screening in last year. We will beat that this year. And the great thing about challenge trials is the value of these trials typically lies between 5 and 10 million, but the revenue is recognized within a 10-month period. So they are fast burning. We're able to generate revenue in a real short time. And how are we positioned for future growth? Well, we have increased our bed capacity, as Cathal has mentioned, so we're able to recruit bigger cohorts faster. We are going to increase our lab sample analysis this year from the 86,000 last year. And our weighted pipeline, now this is the unsigned work that's currently in a pipeline multiplied by the probability of what we think we're going to win, is 75 million. And that's the biggest it has been. So I think the future is really bright for Open Orphan.
So 75 million pipeline, that's fantastic.
it's the biggest it's been. So we use the CRM tool. We monitor our pipeline. I have a weekly call with the BD team, and we are aggressively marketing all the models we have. And I think this 75 million is the total pipeline multiplied by the probability of us converting it to real work. And I think that's a really good measure how well we are projecting to do in the coming couple of years.
Okay, and are you pleased to have joined the business now that you've seen it from the inside? Truly, is it what you hoped it might be?
Oh, I mean, first of all, have you ever tried saying no to Cathal? It's quite difficult.
That's very difficult.
in essence. So after kind of saying yes to him, I was quite amazed. Looking from the outside, initially, when I kind of heard about challenge trials, my question was, is it ethical to do these kind of studies? And when I read up more on it, I'm coming to the conclusion, why doesn't every company doing ID studies do challenge trials? Because you're able to get an efficacy indicator much faster, much cheaper than you would then doing a phase 2 or a phase 3 clinical trial. So, and we've seen the market is going to increase year on year. And I believe, not related to COVID specific trials, but the fact that pandemic has happened, has had an impact on influenza, RSV, and malaria, and so on. And more clients are now querying us with regards to bigger challenge trials than ever before.
Mark Chewin asks a slightly cheeky question. He says, "Are you struggling to find volunteers willing to participate in those company studies, in those human challenge studies?" I think I've already heard the answer this evening.
Our flu camp brand is second to none. In fact, we have so many volunteers that we are actually now selling them to other CROs. So remember, we do challenge trials. We need to have serosuitable volunteers. So in other words, volunteers that will get infected with the virus we challenge them with. So that's about 15%. The other 85% we don't currently utilize. We can sell them to other CROs, but in future we want them to be placed into the phase 1 and the phase 2 trials.
Okay, over to you, Cathal. I bet you never thought you'd find it difficult to get a word in edgeways. Okay, Cathal, let me say, let's start with the RNS this morning, your announcements this morning. What message were you trying to get out into the marketplace with that?
Yeah, Donald, I think that's how I started. We've tried to keep the presentation, I haven't been doing too many presentations the last month or two, because part of it is get the business in really great shape for the year ahead, and that's where we're going. Get time to get Mo integrated, and to make clear to the staff and now to the shareholders, we're going to work together as a team. It's not a case of bringing in a CEO and the chairman disappears off the non-exec. It's going on 7 o'clock and we're still in the office here on Alley Street. So the message we're trying to get across today is that, folks, look at the numbers. First of all, the fundamental basic business is flying. 40 million last year, confirming the guidance, EBITDA profitable. 50 million this year, confirming that this morning for the coming year, and COVID work on top of that. Increasing the bed capacity by 50%. People were concerned last year, where are we going to do the studies? So that's that done. And look, there's an obvious question. People saying, what are you going to do with the bundle of cash? We're clearly saying to people, trust us for a month or two, and you'll see we can make really good use of that cash. We're not going to blow it. We're not currently going to hand it back to shareholders just yet, because we believe we make vastly better use than handing it back to shareholders.
2 or 3 questions have come in about that, and they say, Sandy Ranford, for example, share buyback to improve investor sentiment, possibly, Cathal? No? Yeah,
well, look, how would I say it? We wouldn't rule anything out, but what I'm saying to people at the moment, that people have trusted us, the team. We're a tiny team. It's got much bigger. We now have got an extra pair of hands with Mo, and we spent a few months, we've been very careful getting to know each other. Mo was in 3 or 4 days a week, then 5 days a week, and now 9 days a week, Mo, all right. So on the cash, what I would say, Donald, but people are, look, the market today, there's companies trying to raise money. It's bloody impossible. I saw a company raise money today. The share price was down 30% on a 50% discount to where it was yesterday, just to raise money. We said clearly last year, we will never raise money again. That's a bold statement, but there it is. 16+ million, I said in recent days, we had a few million more on top of that. So on the cash, all I'm saying is people have trusted us so far. Okay, hands up, I overpromised in the spin out last year. But let me come to those in a minute. I have no excuse now at Mo. The executive chairman's role is finished what I started last year. Mo will run the business. He's very hands-on. He'll deal with the customers. He'll get us our 50 million plus revenue this year. He'll get us the big EBITDA profitable this year. And I'll focus on the spin-outs. And that's the promise I have to the market. Does that answer that?
It does beautifully. Ian Birchnell cuts straight to the spin-outs when he says, well, fair play to you, Poolbeg Pharma is terrific. But what about the others? When can we expect to see the other spin-offs completed, says Ian Birchnell? Okay,
well, if you actually look at today with a market cap sub 100 million, we handed back 25 million on Poolbeg last year. That's pretty cool. So where we are, first of all, Prep Pharma was sold to a SPAC in NASDAQ. Can't give the name of it, but if you Google it, it had 186 million market cap on the 26th of December. Our deal was completed on the 2nd of January. It got 100% redemptions, and that SPAC that we had Prep sold into has no cash, 100% redemptions, share price down 95%. So we're having to restart in Prep. We will sell Prep, so that's Prep. The second one, Immutex.
I didn't understand that. Have another go at that for me. In
words,
okay. Simpler terms.
We had clearly, there's 3 spin-outs. Prep Pharma, we had sold last year. We told the market we had a deal done. It was sold to a NASDAQ listed one of these SPACs. It had 186 million cash in it. And unfortunately, as our deal was to complete on the 3rd of January, they got 100% redemption. So there's a danger about NASDAQ SPACs. A lot of them are imploding. So fortunately, we were able to keep the asset. So it's got to go back, and we'll do that deal over again. We will get Prep sold pretty soon. That deal was done, but it was subject to the SPAC completing. Moving swiftly, Immutex, we only have 49%, and I've made clear to the market, it's very difficult if your 51% shareholder is more interested in talking than walking. And that's, but I have a lot more time to walk over to their door and make myself presence felt over the coming weeks. So Immutex has been difficult, but bear in mind, we only own 49%, but with Mo on board, lots of focus. The one that everybody's watching is Disease in Motion. Absolutely, it's going to take a lot of work. That's another spin out like with Poolbeg. It was a lot of work to do. So again, that will happen in the month.
Harder than Poolbeg, would you say?
Yeah, because we're selling it with existing customers, with data, and let's be honest, there's very high expectations and value around it. So we can't just do it in a sleep. So all I'm saying is, I've now no excuse to hide behind. Mo is running the business. I'm very hands-on. I give a commitment. I'll be in the office 4 days a week here and 1 day a week in Dublin, because that's where I live at the moment back. And I think if people bear with us, the spin-outs will happen. We had the Prep Pharma one done, and unfortunately, that SPAC didn't happen. It was a NASDAQ listed SPAC, but all I can say is these will happen now that I have finally got extra time in my hands to do it. But I keep emphasizing, just look what we did over the last year or two. It wasn't bad. Not many companies on our AIM are sitting on close to 20 million uncommitted cash today and have people demanding to return cash. It's a first world problem to say, right, what do we do with 20 million pounds?
Okay, sticking with Disease in Motion, I've got Matt Jones, John Walklate, and Graham Watson. They're all asking questions around this. And basically, you know, you've got five major tech wearable brands. You've got Apple and Google, etc., still in discussions about licensing the Disease in Motion data. Will the company consider getting DIM up and running by signing contracts with them ahead of spin-off?
Work in progress. That's all we can say now, because it's some of those companies we start putting their names in the public domain, the signed contracts. It makes the spin out. They say, oh, we thought we signed the contract with HP of Open Orphan. Now it's a different vehicle. So all I'm trying to say, there's been a lot of focus on that.
Well, that's true. If you ever deal with any of these big people, they never let you talk about it.
Yeah.
Otherwise, boom.
Well, all I can say, John, the reason we're back on tonight, there was no good me coming 3, 4, 5 weeks ago saying, we're going to do this, how are you going to do it? We're here tonight. Mo's on board, and I've nowhere to hide other than deliver these results. But I keep emphasizing the small team we have, delivering 40 million profitable revenue last year and on target to do 50 plus this year. That's not bad work for 2 years, is it?
Okay. Sadly, I'll say, let's just collate all the slightly annoyed and slightly angry shareholders together. They're disappointed that the share price is a lot lower than it was, and they feel that you've slightly exaggerated, slightly overpromised, and it hasn't quite delivered. So there you go. I'm going to put that to you all in one bundle, Cathal.
And the response is nobody is disappointed. You asked the last speaker about writing checks. So I think what makes Open Orphan unique, I'm probably the most heavily invested each year. $500,000 has gone into the company in real money last year, the previous year. So I think all I can say, Donald, is that we will get the share price back where it should be. It's been massive sell-off. We're not happy. Being the biggest shareholder, there's nobody hit it harder myself. Like, bear in mind, talking about buying shares, I paid £300,000 sterling at almost 30p June last year. And I'm not worried. My belief is that's not money wasted. We will have the share price back where it should be in the not too distant future.
Do you think that's investor sentiment, which is totally separate from the core business? Because the core business is firing on all cylinders, isn't it, Mo?
This is what what I've come across. When you look at the numbers, you look at the pipeline and the projected revenue for this year, we're exactly going by the guidance we gave last September. So I don't think there's anything wrong with the core business. We are actually expanding. We're building on what we already have, and I think the external factors, of course, in the on a global scale, we can't control. But on a day-to-day basis, our teams are performing great. We are generating really good results, and I expect to continue that.
Great. So it's investor sentiment, disappointment around the spin-offs. That's what they see as lack of progress. Do you think, Carl?
Yeah, look, I think in summary, Donald, I'm here tonight. I've got a lot more time on my hands because Mo's here running the business. So, and like what investors probably don't realize, doing 2 IPOs in 18 months, that's what we did, spinning off Pool Bag. Bear in mind, we only listed in June 2019. Then we acquired HVO. So yeah, look, give us a bit of time. The spin-outs will be done going forward from here. We had one of them done and it fell out of bed because investor sentiment, that SPAC, and that was completely beyond our control. We were handing shares in a NASDAQ listed SPAC back. The plan was earlier this year on the back of that prep pharma deal.
Okay, one for you, Mo. Would you consider buying shares in Open Orphan?
Absolutely. I mean, when I have the open window, I mean, my net worth isn't the same as Cathal, so don't expect me to buy 70-80% of the company. But yeah, within my means, absolutely, my plan is to invest. And if I could buy it today, I would love to buy it today. I mean, because I think it's a great company to invest in. Okay,
so you'd like to see your interests aligned with the interests of the shareholders.
Absolutely. I mean, no, it makes common sense. You got to have blood in the game. I'm totally for that.
Okay, and Mo, are pharma businesses shifting away from mRNA vaccinations and moving towards antivirals? That's James Johnson wants to know that one.
I don't think so. I mean, we've seen mRNA doesn't, it does provide, vaccination, good protection, but, the disease is still transmissible, right? So I don't think that's going to happen. I think we will need to do both. And also, we don't really know the long-term impacts on the mRNA vaccine. It's still a fairly new technology. So as we move forward, I mean, the inquiries we're seeing are on both sides, the prophylactic vaccine as well as the antivirals.
Okay, Cathal, and if you could sum up the outlook for the business for us in 1 minute. You've got one last minute. Okay,
I think to sum up, we've had a very good team. It's got much better. Certainly, hands up, I overpromised and underdelivered on the spin-outs, I emphasize, and nowhere to hide. Over the coming weeks and months, I think the rest of the mission will be delivered, and we're not talking about years.
Okay, Cathal Friel, Executive Chairman at Open Orphan. Yamin Mo Khan, CEO, new CEO. Thank you very much indeed for joining us tonight. And I wonder what the chat boards will make of that. I suspect they're already burning.
Thank you, Donald.
Thank you for joining us, gentlemen. Thank you so much.
Thank you very much.
Goodbye.
And Petro Matad. AIM-listed Petro Matad is focused on oil exploration, development, and production in Mongolia. The company is currently developing its Heron discovery in the far east of Mongolia, the first part of which it plans to bring on stream in mid-2022, with production expected to rise to around 6,000 barrels of oil per day by 2024. It's a considerable amount. Petro Matad is currently in advanced negotiations with operational service providers for its 2022 work program. Mike Buck is the Petro Matad CEO, and he's joining us live from Italy, I believe, this evening. Welcome, Mike.
Thank you, Donald. Buonasera. I hope you can hear me.
Buonasera.
Thank you very much, and good evening, everybody. And thank you very much for your attendance and your interest in Petro Matad. It's my pleasure to update you on our activities this evening, and then to take questions afterwards. I will whip through the slide deck and won't concentrate on things like the disclaimers. For those of you that are not familiar with Petro Matad, we are listed on AIM. We're a Mongolian-focused upstream oil and gas exploration and production company. We have been doing frontier and near-field exploration in Mongolia for about 15 years. We made discoveries in 2019, one of which we are putting on production this year. And our board, shown on this slide here, includes some experienced oil finders and developers, of which I like to think of myself as one. I joined the company in 2017 ahead of a very busy program in 2018 and 2019 that led to those two discoveries at Gazelle and Heron, with the Heron discovery being clearly of great commercial interest. So to summarize what the company currently has, we hold 2 PSCs, production sharing contracts in Mongolia, both at a 100% working interest. I'll show you the locations of the PSCs on the next slide. The fiscal terms in Mongolia are very good, as is the prospectivity, particularly of the southern Mongolian basins. They have geological affinities to the basins of northern China that have been in production for many years. It's just that Mongolia has not attracted the amount of exploration needed to reveal the riches that lie beneath. Petro Matad was in the middle of 2021 awarded an exploitation license to cover the Heron discovery. This is only the 3rd ever exploitation license awarded in Mongolia. The country has a history of being the preserve of the mining companies, which usually means the geology is hard rock, where oil tends to accumulate in soft rock. But Mongolia is a big place, and it has both. It's just that, as I said, the exploration of the oil potential has been a bit slow in getting moving. So Petro Matad's goal for 2022 is to transit from a pure exploration company into an exploration and production company, with the Heron development starting up and with the production coming online. We also have within our portfolio some transformational exploration potential. And when I say transformational, I mean not just for us, but for Mongolia, were it to come in. And we have identified and we are pursuing expansion possibilities, both in hydrocarbons. We know the geology of the country very well. We have, I think, a database that can be rivaled by no one. And we've also identified opportunities in renewable energy, and we are chasing those. We have a good reputation and a rapport with the government, which is highly supportive and incentivized to support the oil and gas sector. It's building a domestic refinery and has spent quite a lot of money on that already. So in terms of where our assets are, this map of Mongolia doesn't do it justice. It is a huge country. If you haven't visited, I recommend you do. It's also fascinating. Those 2 little pink dots in the middle of the map are our Block 5 exploration PSC, which sits in the central part of Mongolia. The western half of Mongolia is largely undrilled by petroleum exploration. So that's an area the size of France that has had very, very little attention to date. Petro Matad has drilled 2 wells in this particular area and 1 in this block. And we have some very, very large prospects still to drill. They could be a huge impact, not only for us, but also for the country. And they are very, very low cost. I'll come back to that in due course when I describe in a little more detail the blocks themselves. And over in the east of the country, there's a little blow up with an arrow pointing to where the Heron discovery is. This is the basin that has been the focus of production activity in Mongolia over the last 20 years. and where 95% of the country's production comes from. Our Heron discovery is immediately to the south of a number of fields operated by PetroChina. We made a discovery with a well called Heron number 1 in 2019, and another discovery with Gazelle number 1. Heron is clearly commercial, and we've been able to secure the license to start the development. A little bit about the Mongolian oil industry, a little update on that. The chart on the top right-hand side shows Mongolia's daily crude production. You can see peaking there at 25,000 barrels a day in 2015. So it's not a huge production for a country of its size, but this has been a nice earner of foreign exchange for Mongolia. Its average production in 2021 was 12,800 barrels a day or thereabouts, which is considerably lower than it should have been, but that's a function of the pandemic, dampening demand and also creating problems for the export of the crude, because basically all of the crude production in Mongolia is trucked into China where it is refined. Meanwhile, Mongolia needs around about 42,000 barrels a day of refined product, which it gets largely from Russia. The government is very keen to increase investment in the upstream sector, particularly now because they are developing and building a domestic refinery. And the map on the bottom right-hand side, although a little bit small, if you can remember, over in the east, that's where the oil fields are. In the central left-hand part of the picture is where the refinery is being built, which is Mongolia's main industrial area. The government also has plans to build a pipeline between the two, which is very good news, because we would rather put our oil through a pipeline than have to truck it with all the risks that are associated with that and additional costs. That refinery is designed for 30,000 barrels a day, and currently the productive capacity of Mongolia is around about 20,000 barrels a day. So they do need more hydrocarbons. Heron will help meet the needs of the refinery as we ramp up production over the next few years. The refinery is scheduled to be on stream in 2024. The pipeline, we understand that the government has received expressions of interest, and from what they tell us, they're planning to fund it themselves, which is very good news. So as a company, we are funded through to production startup through a raise we did in the middle of last year. This is low-cost production, and we're prioritizing putting Heron 1 on stream as quickly as we can. We're funded for the further development to increase that productive capacity and also not to be reliant on just one well. And in the same vein, we're looking for a farming partner to help us accelerate the development and therefore the production and the revenue. We are negotiating contracts currently with the in-country service providers, most of whom are Chinese, to ensure that the operations are going to be cost effective. We've achieved price reductions compared to our previous campaigns, which is good. We are in the process right now of trying to tie down the costs for the stimulation and completion of the wells, and also confirm with the providers exactly when the rigs will be available. For the completion of Heron 1, we don't need a full-scale rig. We just need workover equipment, and the job will only take a few weeks. It's not like it takes months to do. So that is a relatively quick and easy operation to have done. The drilling of additional wells requires our contractors to tell us when they're going to be able to do it. They've had problems with the pandemic causing difficulty moving personnel around. Those seem to be easing now, which is good news. But of course, PetroChina, who operate the area immediately to our north, they've been wanting to do quite a lot of work over the last 2 years that they haven't been able to do. So they have a considerable backlog of work they want to get done, and we're trying to make sure that we get a place in the schedule that does not delay our operations. We were also approached by DQE Drilling, who are they're a subsidiary of PetroChina, but they're the most active operational provider in Mongolia. They approached us with an idea of a cooperation agreement whereby they were prepared to take some risk, they were prepared to take some deferred payment, and they were prepared to take some payment in oil. That was very exciting for us to hear. Not only are they the most experienced people to work in this basin and have the most equipment. But the fact that they were willing to do things that would allow us to do more with the money we have, and to defer some payments and to pay in production was very, very interesting. We are trying to advance those negotiations as quickly as possible. We've presented to DQE what we would like to do as effectively a wish list of beyond the things that we currently plan. And we've asked them to come back to us with what their commercial requirements would be. They've yet to do that. I imagine that requires some head office approval, but we're pushing them to get back to us quickly, and they certainly seem keen to respond quickly. So meanwhile, we're working on all aspects of permitting needed to move into the production phase. Those of you who've heard me present before will know that permitting is not a trivial matter in Mongolia. There are lots of permits you need. And as a company, we like to make sure that we're operating with all of them in hand. We're also evaluating, as I said, additional opportunities. We've done market soundings for our Block 5 drilling. Those prospects I mentioned, very, very high impact, but very, very low cost. We've had some quite innovative solutions proposed to us. As I say, it would be transformational if we can get this done. So we're keen to move those negotiations forward. Obviously, we could try and do this drilling out of production revenue. If we can do it sooner through some form of risk sharing, that would be great. And we've actually asked DQE to give us a quote, DQE Drilling to give us a quote on what they could do for us in Block 5, as well as what they would like to do for us in Block 20. There is high potential in the southern Mongolian basins. As I said before, the geology doesn't change as it comes across the international border from northern China. And the prospectivity rivals some of the active deep water exploration plays that are being chased around the globe at the moment, for example, Guyana and recently Namibia, where the amount of resource potential that's being talked about is very large. The southern Mongolian basins potentially have prospects of a similar size. Obviously, with no drilling or very little drilling done to date, their chance of success needs to be improved by some people finding something. But this is drilling cost that's a fraction of the cost of the deep water plays, and that similarly the development costs are a lot lower too. We've high-graded some areas. We are looking to apply for some new PSCs. We're holding off submitting those applications because the government is working on revisions to the PSC and the petroleum law. They have been doing for some time. We're chasing them to get an update on their time frame. I would say overall that the current terms in Mongolia are generally quite good, but there are some terms that could be improved. And I'm pleased to say this time around, the industry was asked for its opinion, and we certainly gave ours. And the feedback we had was not that we were asking for things that were just completely beyond the pale. That the justification we provided were generally accepted. So hopefully some of that will be included. We look forward to finding out. As I said, we're also looking at the renewables sector. There's growing opportunities in that sector. It's been stalled for a couple of years, but recently, and as a result of the COP26 meeting and Mongolia's contribution there, a few projects have been given the green light that had otherwise been held up. This is primarily solar and wind, both of which are very, very high potential in Mongolia. We are negotiating with a couple of companies that are active in Mongolian renewables at the moment, with a view to some form of cooperation that leads to prospect and project execution. We're not paying lip service to this. As a company, we have the ability to do project management in Mongolia. We'd like the chance to apply it to renewables. So quickly, just a reminder on the heron overview. The exploitation license we were able to retain was 218 square kilometers, which includes not only the heron field, but also the surrounding prospectivity. And we have a tenure of 25 years plus. As you can see on the map, the green areas are the oil fields. Heron is the most southerly one, and all of the oil fields to the north of the PetroChina operated oil fields, where they have their facilities with spare production and with spare capacity, and we're only 17 kilometers away from that. Heron 1 flowed at over 800 barrels a day on test when it was drilled, and we're very much looking forward to getting it on stream as soon as we can. Forecast for first oil is in the middle of 2022, using the adjacent infrastructure for the minimal amount of processing that is required, and then piggybacking, we hope, on PetroChina's trucking operation initially until the Mongol refinery is up and about. We have a memorandum of understanding with PetroChina to cooperate, and we are waiting for their new president of PetroChina Mongolia to arrive. Well, we understand he's now arrived, but we're hoping for a meeting with him soon to kickstart the conversations on those commercial arrangements that we will need to put in place. So, in summary of the full field development, we're looking at, in the first half of 2022, focusing getting Heron 1 on stream, because we know all the equipment is in country, most of the crews are in country. It's a matter of making sure we get our place in the timetable of the fracking and completion contractor. And as soon as we can get confirmation of when the rigs are available, then we can line up our drilling of the follow-up wells, Heron 2, Heron 3. And as I said, we are also in negotiation with DQE Drilling with the possibility of expanding those operations. In terms of our readiness for first oil, we're pretty much through the concept and equipment selection. I've told you the status of the contracting. Permitting approvals are moving forward, and we've had our export and sales agreements conversations with the regulator in Mongolia, which is a requirement. They have to be aware and agree to what is being proposed. We have had good feedback from them, and they've agreed with our approach that we should first of all propose to amalgamate our operation in some way with PetroChina's and piggyback on their processing facilities and trucking operation. So that is good. We now need to have the conversation with PetroChina as to turning that MOU into an agreement, including the commercial terms. Just a quick slide on the Heron field development itself. This is very, very simple and inexpensive single well production facilities until such time as we get more geological data and can start drilling deviated and horizontal wells from the same pad. So initially it's a pump, probably a beam pump or a nodding donkey, if anybody's familiar with those, put into tanks, and then a truck comes along, takes away the production, takes it to the processing facilities, removes whatever water is still in the crude, and off it goes. So this is very, very simple and straightforward. Now, in terms of what prospects can add value to our portfolio, in the Block 20 exploitation area, as I said, we retained not just Heron itself, but we have a large area that captures the entire prospectivity of the southern part of the basin. And here we have potentially up to 500 million barrels of oil in place on our current assessment, based on 2D and some 3D seismic. And it's up dip of the proven oil found deeper in the basin in Heron, with exploration drilling costs of $1 million or less. We can employ small rigs to do finder operations and then put in a full-blown operation once we've had encouragement there. So we can do the exploration very well. We can obviously do this kind of funding from production revenue. We have no deadline on this activity particularly, as we have the area for the next 25 years plus, but we'd like to know sooner rather than later how much of this potential is present, because obviously we'll need to size our operations accordingly. So a lot of near field opportunity here, high chance of success, low cost of doing it. In Block 5, we have an area we call the Raptor Trend, which is a series of inversion anticlines, Velociraptor being the one that we consider to be drill ready and the most attractive, being that it's the largest and the best defined on current seismic. The little cross section of the bottom left hand side shows where Snow Leopard, our 2018 well, was located. Didn't find much reservoir, certainly not at the target horizon, but found good source rocks, good oil shows. And moving to the south only 7 kilometers, we're into this anticlinal trend, where we have the potential for greater sand development, stacked pay, and upwards of 200 million barrels recoverable in Velociraptor alone, with follow-up potential of double that in the Oviraptor and Sagonoraptor features on either side, and an even bigger one that's very, very shallow, but we certainly wouldn't leave it behind. Here we do have a deadline. We only have 18 months or 19 months remaining on this license. It's been in moratorium through the pandemic. We're hoping to be able to find equipment that's available, and we would very much like to move forward with this. If we can't do it this year, then we will attempt to keep the clock stopped, which has been done before, and we still have good reason for that. It's been difficult to get permits on Block 5 because meetings were not allowed due to COVID, etc. So there have been delays. But we're looking here at a well cost of $1.4 million or less following our market soundings. So here is huge potential, transformational for Petro Matad and for Mongolia at a very reasonable drilling price. We have also asked DQE Drilling if they would like to include Block 5 in their thoughts for our cooperation agreement, as maybe that could accelerate the drilling of this prospect. So in summary, we're Mongolia's next production company. I think we can say that with confidence. There's nobody else coming along who's going to beat us to the punch. We're working with the government to streamline approvals and improve the investment environment for others, because we would like to attract others to partner with us and to find the riches that Mongolia undoubtedly has. We're looking to expand our portfolio, as I've said, and we are a responsible operator, as befits our London listing, proactively managing our ESG risks.
Okay, well done, Mike. That was terrific. Let's stick with Block 5 while we're at it. How confident are you in getting Block 5 drilled this year? Asks Cardoso. And I know Carl communicates with me. He's a long-term holder. And Clyde Evans from Western Australia, you've got holders all over the place. He says, and if you do so, will you have sufficient time to execute the exploitation license? And you were referring, trying to put the clock on hold there. So is 5 going to be drilled this year? Are you going to be able to put the clock on hold?
Well, I've said many times, I don't want to walk away from Block 5, even though it's rather late in the license with only 19 months remaining. I don't want to walk away from Block 5 without having drilled this trend, because I think this could be the place where that oil that we found in the source rocks in Snow Leopard could very, very easily have gone. And this is a prospect I don't want to leave for others. The money we raised in 2021 was enough to get us to production on Heron and to allow us to not be relying on just 1 or 2 wells in that respect. So that money was assigned to that activity. And as much as I'm an explorer, and as much as I would like to divert money to Block 5, because I've got a feeling about it, I obviously have to convince my board of that kind of stuff. So the board has said to me, yes, we really like the prospectivity. We do want to drill that well, but let's see what we can do with the resources we have. Let's see what we can do with the contractors we have. Let's see if we can find a way to fund that well, either in 2022 or 2023. At the moment, it depends what they come back with, the contractors we're talking to, and the other companies that we've tried to introduce to Block 5's exploration potential. Clearly, it's not a lot of money, but we run a tight ship. We want to be able to get the Heron work done as we said we would. So at the moment, I'll have to, although I appreciate Carl is a very interested follower of the company, and we're glad to receive his requests and inquiries. Likewise, Clyde. I know I'm not directly answering the question. I'd love to drill it this year, but my board keeps me in check. And if we can't drill it this year, we will try and stop the clock so that we can still have 19 months remaining. It's a good question as to, do you have enough time once you've done it to make sure you can get an exploitation license? I think our experience on Block 20 has taught us a lot about what Mongolian processes require to get the exploitation license approved, and fundamentally it's data. So you need certainly a well. you need some seismic. So we've got some seismic. We would like to drill a well. We would have a rig contract that would allow us to drill an appraisal well in the happy event of success, back to back with the discovery well, and then we'd use the winter period to shoot some 3D over the prospect and the adjacent prospects to allow us to keep a decent area. So one of the questions that my board asked me is, well, obviously we want to make sure that if we do this, and if we, as we hope we will be, are successful, then we are not risking not being able to hang on to it because we can't meet the needs of the current processes. We know those processes very well. We've presented our ideas to the regulator, and they're supportive of additional exploration being done because they need to fill their refineries. So yes, we think that there is enough time to get all the data we would need to satisfy the requirements of the approval process for the exploitation license.
Okay, Mike, Heron-1, you've got lots of bits and pieces, permitting, you haven't got your contractors lined up, but you're still giving me a middle of the year, and it's going to be you know, spudding and so on. Why are you so confident that is achievable?
As I said, the operation on Heron-1, the well is already there. The well is cased to bottom. We did a drill stem test on it. What we need to do now is re-enter the well with some workover equipment, clean it out, do some stimulation, which will in this case be some hydraulic fracking of the reservoir, and then complete it for production. This is an operation that the contractor in Mongolia has done hundreds of times before. They're very efficient, they have good equipment, they have good people, and the only concern at the moment is they have a very full order book. But as I mentioned, this is not an operation that takes a long time. It just takes a matter of a couple of weeks to do this work, and can be done without the need for, you know, a major camp on the Heron location or moving a lot of people around. So what I want to be able to do is to secure our slot in their work program, and this is what we've asked them to confirm to us, when they will be available to do this work for us. Meanwhile, we need to get in place all the permits we require to install the foundations for the pump, the foundations for the tank, the pumps and the tanks, to make sure everything is ready to start exporting that production. And simultaneous with that, we need to get talking to PetroChina about what are the commercial details of putting that oil through their facilities. So there's a lot going on there. The thing that we have the least control over, I think, is the permitting, but we have done absolutely exhaustive over the last 2 years. We've done exhaustive reviews of the legislation, talked to all of the local authorities about what it is we need. So I think we've got a good handle on that, and that permitting is proceeding. There's a lot to be done, but that's where we want to get to. We don't want another year of limited activity. Obviously, the last 2 years were down to, well, the pandemic to some extent, but also trying to get an exploitation license. We've got it now, and we want to use it.
Final question, Mike. Let me just jump in there. From DQE, sum up the pros and cons of DQE for numerous questioners.
Yeah. Okay. Well, we were very happy to receive their initial proposal and thoughts on a cooperation agreement, because clearly, as I said, they are the most experienced operator in country. We haven't had details from them yet of what exactly it is they want us to do, how much they want us to pay up front, and is that on a basis of per well or per annual program. They've yet to say whether the well cost will be less than the well cost we've currently been quoted by DQE. That's for effectively a 2-well program. This, we would be looking at a much larger program over a number of years. And so we've asked them, well, you know, we would expect some economies of scale in that case. We're waiting for them to come back on that, because obviously with the amount of money we have, we want to be able to afford what they are proposing. The fact that they are saying that they're prepared to share some risk, defer some payment, and be paid in oil is brilliant. But you know, exactly how much, because I need to work out what it is we can afford. We don't want to take on, you know, debts we can't repay, or you know, put the company in hock because we were in a rush to get this done. But at the same time, the solution for Heron to accelerate production and therefore revenue is my primary goal. As we can all see, with the oil price being where it is now, you want to make hay whilst the sun shines. We don't want to miss out. So we're going to try and move ahead full speed to get that done. And the conversation with DQE is a good one. They're obviously used to working for their own parent company. They've worked for us before. We thought that went well, but there was a bit of a learning curve to go up. That may be a little bit of a con as regards to pro, but we think we're halfway there already. So we think we can work together very well.
Okay, Mike Buck, CEO at Petro Matad, thank you so much for joining us live tonight from Italy. A completely fascinating company story. It's been a slow train coming, as Bob Dylan says, but 2020 may well be your year. So I look forward to hearing of progress updates from you.
Thank you, Don. Thank you very much.
Thank you, Mike. Ora Minerals is a TSX listed, that's a Canadian listed mid-tier gold and copper production company focused on the development and operation of gold and base metals in the Americas. Ora fully owns 3 gold copper operations in Brazil, Mexico, and Honduras. That's 3 gold copper mines to you and me. They're a big player. They also have 4 projects at different stages of development in Brazil and Colombia. Ora expects to reach annualized production of at least 400 kilograms to 480 kilogram ounces of gold equivalent by 2024, an over 50% increase compared with their 2021 production. So lots of growth potential there as well. Now I'm joined live by Kleber Cardoso, and he's the Chief Financial Officer at Ora Minerals. Where are you talking to us from, Kleber?
From Miami. So Eastern time here is 2:30 p.m.
2:30 p.m. And that's the headquarters for Ora Minerals, is it?
Yes, that's correct.
Fantastic, Kleber. Right, over to you. You tell us the company investment story.
So sure, let me first share my screen. So I think the most common questions nowadays, can you see my screen?
Yes, I can see your screen. It's looking beautiful. Thank you very much.
Yeah, okay. So let me start first introducing Ora Minerals for those who don't know the company. So Ora Minerals is a growing gold and copper producer with operations throughout the Americas. As Donald was saying, we have 3 assets under operations. We have the Anzá gold and copper mine located in Mexico. We have the Sandres gold mine in Honduras. And we have the APP gold mine located in Brazil. Besides those 3 operating assets, we have 4 projects which we expect to put in production in the next couple of years, which are going to help for the growth of the company. They are the Almas gold project, also located in Brazil, should come in production at some time in 2023. We have the Matupá gold project, also located in Brazil, which is going to come in production in 2024. And we have 2 additional projects, also the San Francisco gold project, also located in Brazil, and the Toda Fria project in Colombia. In 2021, Ora reported $445 million in revenues, which was a 50% increase compared to the previous year. So 21 was an important growth year for Ora Minerals. In terms of EBITDA, we reported $185 million in EBITDA in 2021. It was a record high for the company's history, and over 50% increase compared to the previous year. And we are a pretty much unlevered company, so we have 0 net debt over EBITDA. So we have around $160 million in cash equivalents to invest and put some of these projects in operations and the equivalent amount in gross debt. So in terms of breakdown of our revenues and our production in terms of geography and type of metals. So in 2021, about 40% of our gold equivalent production came from Mexico. So in Mexico, about 2/3 of our revenues are coming from copper, we convert to gold equivalents, and 1/3 is gold. 33% came from Honduras. It's a gold asset that we just produce Honduras, gold out of Honduras. And Brazil accounted for 23% of our production. The United States was just 4% of production. That was a discontinued operation, which we put in care and maintenance in 2021. Sorry. In terms of breakdown by type of metals, gold is our main product. About three-fourths of our revenues came from gold in 21, and 24% from copper. And Ora is a growing story. In 2021, we produced 269,000 ounces of gold equivalents, which was a 113% increase since 2016, and over 100% also increases since 2018. So a strong increase in the last 3 years. And we expect to achieve at least 400,000 ounces of gold equivalent in production by 2024, by putting especially the projects Almas and Matupá in operations in the next couple of years. In terms of dividends, Ora paid $85 million in dividends during the year of 2021. That represents a dividend yield of 13.5%. That was by far the highest dividend yield among all gold producers listed on the Toronto Stock Exchange. So, Donna and everyone, I can say that besides being a growing story, Ora can be considered a dividend story. Ora ranked #1 in the latest TSX 30 ranking, which evaluates the top performing companies in terms of share price for the last 3 years. So among all the companies in the mining and non-mining sectors listed on the Toronto Stock Exchange, Ora was #1 with over 1,000% in share increase in the last 3 years. But as I'm going to show later, it's still with room to grow. A little bit more in details our growth plan. As I presented before, Ora grew between 2018 and 2021 more than 100%. So between 21 and 22, it should be more stable year. So we have some increase, but it's a marginal increase as we're going to be focused on the construction of Almas. So Almas is currently under construction. We should do most of the construction this year in 2022. Should start producing by the second quarter of 2023. Almas itself should add between 50 and 55,000 ounces of gold to our annual production, and is a mine with 16 years of life of mine. So it's a pretty long new mine we're going to add to our portfolio. Matupá is another project that we have in-house. We just issued a preliminary economic assessment on Matupá. We are currently working on a feasibility study, which should be completed this semester. In Matupá, we expect to go in production by 2024, which should add another around 60,000 ounces of gold production period. So if you take just our current production, what we expect to come from Almas and what we expect to come from Matupá, we should get to the 400,000 ounces of analyzed production by 2024. And then we have some upsides. We call some management targets, some challenge for us here at management to exceed that number by either increasing. We have marginal increase opportunities at all assets to increase production in all of them, all the current assets. So we can go above the 400,000, and also opportunity maybe to speed up São Francisco, which was the next project in line. So if we're able to accelerate and bring in production by 2024, we can achieve to our upside to 480,000 of gold equivalent production by 2024 from annualized basis. In terms of reserves and resources, so we are increasing our production significantly in this last couple of years, but despite the increase in production, we have also been able to increase our reserves and resources base. So here we bring our reserves and our resources between 2017 and 2020. Within this period, there was an increase of 30%. Despite an increase in production. So despite the increase in production, we have been able to more than replace what have been consumed by our mines. and increasing our reserves and resources base, and therefore our life of mine. It's partially due to our increasing exploration investments, so increased by 3 times between 2017 and 21, the amount we are investing in exploration. In 22, we're planning to invest again over $20 million in exploratory activities. So we expected to see this increase in reserves and resources beyond the increase in production to continue in the next couple of years. On this page, we bring a simple analysis on expected returns of newly announced gold projects, comparing our projects here at Aura Minerals and some of our peers. On the far left side, we did an internal analysis, what was the internal rates of return for the Anzá, which our mine in Mexico, which we restarted at the beginning of 2019. So considering what we have invested in the expected returns for the next few years, we are talking about over 200% internal rate of return per year. So it's an incredible return for the Mexican mine. But the 2 projects that we have in the portfolio, which I talked about, the Almas project and the Matupá, they are all also among the highest expected returns in the gold industry. So the Almas gold project, for example, is expected to deliver 57% of internal rate of return per year during the 16 years of life of mine, considering first gold price at $1,558, and now I think today everyone is seeing gold is above $2,000 per ounce, you know. So we were pretty conservative on gold prices and unleveraged. So if we leverage almost at least by 50% and consider 1,800, for example, gold prices, that internal rate of return go above 100%. It's rarely seen, you know, in any type of business, that kind of internal rate of return. Matupá also is at 39% expected internal rate of return with the same base. Gold price at $1,550 per ounce and unleveraged. Considering more current prices and leveraging project, that should exceed 80%. Another very good and very attractive projects. Are 2 projects with very low cash costs. So that's why the expected returns are so high. On this page, we bring an analysis. For me, it's a very interesting analysis on the cash costs of the company. So for this analysis, we use the database provided by Wood Mackenzie. So Wood Mackenzie has a very large database in which they take the projects and mines, gold projects from public companies, and they try to compare apples to apples. So in that analysis in 2020, Aura was in the middle of the 3rd quartile in the cash costs. In 2021, with our increasing production, economies of scale, and also investments we did in efficiencies to reduce the cash costs, we are in the low 3rd quartile, so a much healthier position already in 2021. But the good news is, as we see Almas and Matupá, they will, as I said, they have a very low expected cash costs. They're expected to be in the 1st quartile. So when they come in production, we expect to see Aura to be like a solid 2nd quartile player with these new 2 projects in its portfolio. On this page, we bring the valuation analysis. As I was saying before, despite our share price increasing over 1,000% in 3 years, we see that Aura is still undervalued. So we bring, for example, here on the left side of the page, 2 analyses, one comparing price over NAV multiples, comparing Aura with some peer group. So we see that comparing with the average of the peer group, Aura is 26% discounted. And also below here on the bottom of the page, price over projected cash flow. So under that analysis, the discount is even higher with the same peer group. Aura, it seems to be discounted by 50%. So again, I think different analysis indicate a good opportunity. And on the right side of the page, we bring another interesting analysis that, okay, it's comparing the P/NAV multiples for our current peer group, that is companies with production below 400,000 ounces per year, and companies with production annual production of above 400,000 ounces of gold equivalent per year. We see the bigger companies, they trade at higher multiples. So we believe there's an opportunity as we keep growing, we are going to see a reprice on our shares in the next couple of years. And finally, I'd like to end our presentation with this slide that brings our 360 mining concept. So we literally use this very same slide to show you in all our internal presentations, in our external presentations, just I'm doing right now, in interviews when interviewing candidates, because this is part of our values. So the 360 mining, it includes ESG, but it's much broader than ESG. We're bringing these slides at the beginning of the presentation of the internal meetings, for example, we have to provoke us to ask ourselves, okay, what are the impacts of our actions or our decisions in each of the meetings to the community, for example. And when we talk community, we have the social side, so what's going to be the impact for the people who live in the communities, but also in the environment which we're part of. We also look at the expected impacts for our employees. So first is in terms of safety. So we have a zero accidents target here at Aura. Safety is our top priority. And also how our actions and decisions are going to help with the development, our personnel, with retention of talent, with promotion of diversity. So we have a very strong meritocratic environment in which we try to bring, attract, keep, and reward high talent. So that's also important for us to think on a daily basis. And finally, on the company side, of course, when I talk about company, one of them is shareholders' return, because I think we all have to deliver return to their shareholders. That's definitely part of our job. But also, what's going to be the impact on corporate governance, for example, on innovation and innovation in terms of process for our company, for the industry, or even for the world. So I'd like to bring these in a close presentation with our values that we try to live on a daily basis as we're growing the company.
Fantastic. That's wonderful. Thank you. That's so interesting. Let me just ask you if, given that you're cash positive, you pay 13.5% in dividends and you grew 32% in 2021. You've still got a lot of money. What's the potential use of those funds? Do you see potential M&A ahead? What's the answer to that?
Yes, so M&A is part of our strategy. So we are looking, we have analyzed internally over, I think, 35 or 40 teasers in different stages, etc. So, but we are being very selective because we have a nice story. Our current operating assets are generating very high returns, as we saw. We always compare with Pharma and Matupá, which are two very nice projects, no? So yes, acquisitions is part of our growth strategy, but we have tried to be very selective to make acquisitions. So
would that be another mid-tier, or would that be a junior miner? And would that simply be in Canada or further afield?
It's probably in the Americas. So as you saw, we are a player in the Americas. There are lots of opportunities in the Americas, preferentially in the jurisdictions where we operate, or North America. We always getting familiar. So we avoiding what we say geological risk. So we're looking for potential targets, either companies that currently in operations or close to be on operational stage, but which already have reserves and resources and a decent life of mine ahead.
Okay, I mean, the fact that you're such a well-run company and doing so well, in a funny way, it actually puts a lot of pressure on you, though. You were the top performing stock in the Toronto Stock Exchange over 3 years, you tell us. Does that?
Yeah.
There must be some real pressure to keep replacing reserves and resources constantly, because you seem to have managed it for a couple of years hence. But you must be sitting there thinking, crikey, we've done it to 2024. What next?
Yes. So I've been here with the company for a little bit over the 3 years right now. What I can say is both here at shareholder level, board and management, what we try to have is discipline. So okay, I can tell you in late 2018. The long plan, the vision for 2024 was quite similar. So in mining, there are few shortcuts. Okay, geology, for example, takes time. You have to invest, do the drill holes, go to the labs, get the results. You have to be patient and diligent and avoid shortcuts. So what we're trying to do is building a company that's going to bring value in the long term. We saw we're delivering value in the short term, so 1,000% for 3 years is significant, but we have the long term in mind. So we're trying to create a big, robust company, well managed, in avoiding to take shortcuts. So I think that's important in terms of pressure. Okay, what's the right thing to do? How we're going to create shareholder value? How we're going to increase the life of mine, like you're saying. With good management and avoiding shortcuts and having the discipline and sticking to our long-term plan.
Okay, you return a lot to investors in dividends. Why is it important to be known as a big dividend player? I mean, you pay substantially more than other people do. Is that how you want to differentiate yourself from other mid-tier gold producers?
Not necessarily. So I'll say we are.
Why then? Why?
Yeah, we're both, we are a growth company and a dividend company. So we see we're delivering on both sides. So
is a dividend a way of hooking in institutional shareholders?
Yeah, no, but so in terms of dividends, like we saw, we're a strong dividend player, but also we grew by over 100% our production, and we can increase by another 50%. So we want to differentiate by both. It's hard to be a growth company and dividend company. So what showed in 2021 that is possible. So we paid 13.5% in dividends. We grew the company by 32%. We are putting money in Almas to build Almas, which is a non-operational asset yet, and we have zero net debt. So we're trying to have a combination to maximize shareholder value. And shareholder value is partially dividends, part of that growth, but with low risk. And when I mean low risk is okay, let's work with a low leverage. Let's diversify our portfolio in terms of jurisdiction. We believe this is what maximizes shareholder return. Everyone's looking for high returns and low risk, and we're trying to differentiate ourselves by trying to combine a little bit of both.
And what does your shareholder base look like? Is it mainly institutional, or do you have retail shareholders in there?
Yeah, so a combination. We have a controlling shareholder, which has a 51% stake in the company, which is a group of Brazilian investors. They founded Yamin Gold like many years ago, which today is 4 or 5 times our size. In 2016 or 17, they saw the opportunity of acquiring the control of Orosur Minerals and do a story similar or even bigger than Yamin. So they are the strategists now with a very successful group, strategic investors of Brazilian investors. And
they've been very helpful to you in terms of your growth and strategizing on your behalf a little bit, perhaps.
Yes, definitely. So it's something they did with Yamin Gold. They founded Yamin and grew Yamin significantly to build today one of the major gold companies. Now they joined our story a few years ago, we are seeing that the results now have been very positive in providing a lot of strategy. But other than that, we have yes, we have funds. We have over 40,000 retail investors also in our shareholder base. So it's and growing.
And they're listed in Brazil. It's a Brazil listing that gets you the 40,000 retail shareholders.
Yes, mainly, yeah, exactly. So yeah, Aura is a dual listed company. We have shares listed on the Toronto Stock Exchange. Then we have BDRs. BDRs is like receipts, just like ADRs, listed in the Brazilian market. So and then we have this shareholder base. Some of them even interchange position, but they are Brazil, the other in Canada. That's quite flexible.
Okay, let me take you to Honduras. If you could sum up what's been taking place in Honduras recently, our audience will not know this, positive or negative. They don't know what's happening in Honduras. So just fill us in what has happened there and how will it all play out in the future? Is there anything to be worried about there?
Yeah, so Honduras around 1 week ago, more or less 1 week ago, there was an announcement by the Ministry of Mines, Energies, and Environment that they would ban open pit mines in general, metallic and non-metallic. But then, there were some concerns. We had to issue a press release about that. We didn't know.
You run a big open pit heap leach mine in Honduras.
Exactly. So it's 1/3 of our production. But then on Friday, we just issued yesterday a new press release clarifying. So apparently there was a misunderstanding. What the government wants to do is to target non-regulated mining activities, illegal mining. So because that's exactly what destroyed the environment. The goal of the government, they always stated was, okay, we want to take care of our water, our rivers, our environment. So we all know that mining is sustainable if done in the correct way. So if you have like we do have the 360 mining concepts, if you follow the applicable legislations, etc., that's a sustainable business. But we all know in all parts of the world, especially in the developing countries, there is a lot of illegal mining, no permits, that don't follow the
artisanal
rules.
Mining?
Yes, exactly. Artisanal, that might use some checkable products. I don't know. So this is their focus. So on Friday, the Ministry of Energy and Mining, he held a press conference in which he clarified. He said, okay, I want to make sure that everyone that has permits are working according to the environmental laws. You guys are not our targets. So we are targeting for those who are destroying the nature things. So artisanal guys without permits, etc. So
fantastic. Okay, Kleber, last question for you. My final question: what news flow can we expect from you over the next 6 months, and why should UK investors invest in you?
Yeah. So I think that in the near future is going to be developments of Anza and Cathal. So in 6 months, we should be quite advanced in the construction of Anza. So I think we are going to keep the market updated on the progress. So far, we are on budget, on schedule. That's going to be our main project is Anza now. In Matupá, we should complete the feasibility study and be able to put something like more details in terms of when we expect exactly to start building Matupá, looking for alternatives of financing, etc. So I would say the 2 big projects which are going to help us deliver the growth that we represented here today are Anza and Matupá. So I think that's something people should pay attention. And for investors, what I say is what I'm saying now. I think in terms of what differentiates us is shareholder return. So some people like the growth, some people like dividends. We have been delivering both. So I think it's we're maximizing total shareholder returns. So I think that's good. And the other thing is I think people look to avoid risks. So by having, like I'm saying, strategic investors behind us with over 40 or 50 years of experience in gold mining sector with a very positive track record, professional management team, conservative financial policy in which we try to work with very low leverage, and right now it's close to zero. In diversified mining operations like we do have, I think that all reduces the risk. So I think all investors are looking at maximizing shareholder return, but at the same time taking care of potential risks that the business in a bit of a
Okay. Kleber, Cardoso, we're out of time. That was absolutely fascinating. Thank you so much for joining us from Miami this afternoon for you and this evening for us. That was fantastic. Kleber Cardoso, Chief Financial Officer at Orosur Minerals.
Orosur Minerals. Thank you.
Orosur Minerals. Remember that name, Orosur Minerals.
Yes, and we are available. We have a very active investor relations. So anyone who is watching us, if you have any questions, feel free to getting our website, send a message to our investor relations officer and team. We will reply usually very quickly.
Fantastic. And not only that, so there you go, you've got the offer of investor relations team. But if you'd like to buy shares in Orosur Minerals in the UK, which some of you might, having watched that, or any other TSX or TSX venture listed stocks, then Interactive Investor, we've been doing our research on your behalf. Interactive Investor trade them on their platform, and the price only £7.99 per trade. And that's it from us after another great night. Thank you very much to all our speakers for joining us live from around the world. That was fantastic. Thank you for staying with us to the very end. We're really grateful for your time, and we look forward to doing it all over again in mid-March with Greatland Gold, possibly with Red Cloud towards the end of March or the start of April, and then April the 26th is our next full-blown webinar. Look forward to seeing you there. Good night and stay safe.